Let's get perspective on today's news from Ross Healy, CFA at Strategic Analysis Corporation. Ross, great to see you as ever. Comment on these U.S. job numbers. Have you had a chance to check them out?
Yes, and they're actually, Andy, they are consistent with the trend that has been now in place for some time. Now, broadly speaking, very, very slowly improving, changing. But after you've said that, just enough probably to put off having the Fed do a rate cut to preserve the job outlook. I think that would be the best way that I would put it.
What is your feeling on the U.S. economy in general, Ross? So we do have these imbalances between high-income and low-income people. And of course, that has hurt results for some companies.
Yeah, we are fairly optimistic looking at the U.S. economy for this year. Nothing very exciting, Andy, or flashy, but I think steady progress in the order of probably 2, 3, 4%, something in that order. There is nothing, I think, to prevent that from occurring. And as I say, we are optimistic for 2026.
What is your feeling on gold, Ross? What signal is that sending with gold hitting new record highs this year?
Well, looking at gold is really interesting, Andy, because it sort of spiked up to 5,600 and a little bit, and then dropped a sharp $1,000 or something in that kind of order. In other words, it's the kind of volatility that you would expect when a commodity spikes up to a new all-time high. Now, after that, what has been going on is that there has been a slower, more steady increase on a daily basis on the in the price of gold. And what is really interesting about that is that when we look at the stocks themselves, okay, they had run up on that 5,600 thing, dropped down, and they are now trading more cautiously than they had previously. In other words, the market has been spooked by that spike. However, when we take a look at the earnings for the gold companies, I think they're going to be real blockbuster blowouts, and I suspect that investors will gain some confidence once again in the stock prices.
Would you be a buyer of big gold producers right now, though, Russ?
Yes, I would, and particularly, I think the really high quality stocks. I always think of Alamos and Agnico Eagle, but at this juncture, practically any gold stock, I think, is going to work out well. And when you look back in the history of gold price movements, there's the sort of the slow, and then you start going up the exponential curve. Well, we haven't seen that quite yet. We almost got it, but what happens in those cases is that you suddenly get the American investor starting to come in, and when they come in, then watch out, things can get really, really interesting.
You note local opposition in many parts of the states to these new AI data centers. Partly, of course, there's concerns about local electricity rates going up, water usage in other parts of America. Is that an important feature? Do you think it could turn into a real roadblock for growth of
Yes,
AI spending?
yes, Andy. I think one of the biggest news comes from New York, where those new AI server farms are being blocked by citizens and politicians alike, and that movement is spreading across the states because people are saying you're not going to plug into our local electricity source and drive up the cost of electricity. And where do you think you're going to get 300,000 gallons of water every day to cool these wretched things down? And I think there's going to be there is now a real backlash. We have my son actually coined a term for it. He called it NIMBY, not NIMBY, but NIMBY, meaning no AI in my backyard. And as I say, that is really spreading across the states. So far, it does not appear to have particularly hit the what I would call the AI stocks, the chip producers and so on. But if you slow down that hope for estimated growth by a substantial margin, which very much appears to be the case, then eventually there's going to be quite a backlash because these stocks are so expensive.
We've only got about 30 seconds left. Ross, Verizon is a stock you're interested in right now. Tell us why. I'm sorry we're so tight for time.
No, that's fine. Listen, Verizon has been growing very nicely and steadily all the way through the piece and has a heck of a dividend yield. Now, the stock got bashed down because of concerns about its growth, but the company has been working very, very hard to improve that, and the market now appears to be saying, yes, I think that's going to be the case. When we originally recommended the stock, we had thought that it probably had a good solid upside of 33% or more. But if the market really, if those numbers start to come through, which they're promising, then the stock is very, very cheap relative to its long-time highs and could move higher and maybe a lot higher.
Why? Sorry, can we just put up that chart again? I don't know if there's a problem with the chart, but we just saw a spike in Verizon, it looks like. Yeah, I don't know if that's some artifact, some data glitch. Yeah. Anyway, but thank you very much indeed. I really appreciate it, Ross.
Okay, Andy, my pleasure.
Ross Healy, CFA at Strategic Analysis Corporation.